All right, so straight to what we have today, we're going to be looking at identifying support and resistance zones. Then after that, we're also going to be looking at all the identifying support and resistance zones, Fibonacci retracement zones, then discount and premium zones. Okay, that's what we want to be looking at today. All right, so off to the call, which chart will I use now to draw? Go if you have any markup on go. Okay, let me just look for something else to use. 50-50. All right, so let's study. This one is even a bit clearer. Support zones, resistance zones. See how price came in here, resisted, supported, resisted, supported, resisted. Price broke above, came back, resistance turned to support, and then continuing what blasting above. And you also see this one here. Support and resistance. Can you see this all that happened here? Support and resistance. All right, going back to the chart, you continue to identify. Can you see this also? So that means even the whole of all this region, namely the whole of all these levels, they're what support level or resistance levels before. The whole of all these levels, can you see? Were what support levels. So can you see how neatly price did what came in here, bought, came in here, bought, came in here, also do what bought. You can see how price sold from here, okay, sold from here, and all of all these places. So that is just basically what support and resistance level is all about. All right, so you want to be able to identify these things. Well, you're going to understand the importance of support and resistance level. And then, mind you, not all traders are SMC traders. The fact that we don't trade support and resistance does not mean the strategy don't work. All right, so it's one of the things that later on in the course of our learning, because one of the very good things we SMC traders like to do, or we are fond of doing, is the fact that we know how to downplay any retail trader anywhere at all in the world, which is not something you want to live by. That you trade SMC and somebody else is trading support and resistance does not mean the person will not be profitable. If you say the only thing you want to trade is trend line, the only thing you want to trade is support and resistance, just stick to it. All right. You just want to learn to do what? Stick to it. It will pay you. All right. But nevertheless, we just want to learn how to identify these things. The knowledge is going to be important in the long run, especially when you get to the phase 3 part. When you now start seeing things like supply and demand, support and resistance, how we can even use it to our advantage, not just to use it to look for liquidity, but we can also use the support and resistance to our advantage to use it to do what? Take one or two trades and stuff like that. Okay, that is just the major way to be able to identify support and resistance zone. All right, so that is it for support and resistance. Let's now go over to what the Fibonacci retracement tool. At the end of the class, we're going to take one or two questions. If you just have any questions, you can just be writing it out. All right. So then Fibonacci retracement tool. All right. What is the Fibonacci retracement tool? And then why do we use that? Okay. So, but before we discuss the Fibonacci retracement tool, let us discuss premium and discount zone. Because that's what we use the tool to measure. We use the tool to measure what's premium and discount zones. So let's assume you want to buy iPhone. All right. Let's say this is iPhone. Initially it was sold at $100. And then at some point the price rose to $1,000. All right. So let's say this is the cost of iPhone, and let's say you had what $5,000 in stock as the capital, and then if you wanted to invest the entire of this $5,000, all right, to buy iPhone when the cost of 1 unit of iPhone is $100, by the time you purchase with your entire $5,000 to purchase iPhone with the unit price of $100, you'll be getting up to about 50. Are you serious? You'll be getting up to about 50 iPhones, all right, that you can sell. All right, 50 different iPhones you can sell. Let's assume you happen to miss iPhone when the price was as low as $100, all right, and you had $5,000 to be able to invest as capital to invest in the phone business, but you missed it when it was sold 1 unit of $100, and then the price happened to rise to $1,000. If you should be buying iPhone at this particular point, how many units will you have? Just 5 units, right? So let's say you miss iPhone when a unit was $100. If you had invested, then you'll be getting up to 50 units. And price has already risen up to $1,000, which if you invest, you just be getting 5 units. let's say you now want to buy. One of the very best things to do is to wait for price to come down to what? A discount rate. All right. Or let there be a discount in the price where we say, okay, fine, I cannot buy this high because the price is too high for me to buy iPhone. Let me just wait for the price to come down all the way what's low. Let's say, okay, I'm going to buy it. Let's say if you can see it at $500, then I'm going to buy it at $500. Okay. That's waiting for price to come down all the way from $1,000 to $500, which at least with $500, you should be able to purchase about 10 units, right? It's way better than purchasing iPhone at $1,000 for 5 units, right? It's way better purchasing 10 units than purchasing 5 units. Okay. So the ability to just wait for, let's say you missed price action here and you're looking for iPhone is now very cost. Where possibly can you now buy the units from again? All right. One of the things you can do is just to wait for price to come to a discount level for you to be able to buy. All right. That is also what discount levels are. All right. We use it to find a very good point where we can seek buying opportunities from the forex market. Like we need to identify very good points where we seek buying opportunities in the forex market. Okay. So when price is high, we don't want to be buying high. We want to be buying what? Low. We don't want to be selling low. We want to be selling what? Selling very high. So let us also assume that, okay, fine, iPhone was sold initially at $1,000 and you had 50 iPhone. Let's say you bought it low here, you had 50 iPhone, and people were selling the 50 of them one unit $1,000, and you missed it when people were selling it here, and price came all the way to $100. Instead of you selling the 100 of them or the 50 iPhone at $100 because you missed it here, you can wait for price to come back to at least $500 so you can sell it at what? At $500. So you can even make more gain than selling it at what? $100. The act of selling high is just the known, or is just what we know as what? Selling at what? Premium zones. And then the act of buying low is what we know as buying what? At discount zone. That is just what premium zones and discount zones currently are in the forex market. Okay. That is what premium and discount zones are in the forex market. So whenever you want to buy, you want to be buying at discount zones. When you want to sell at what? Premium zones. All right. So what then is now the use for the Fibonacci retracement tool? This tool, you will find it in the third column of your toolbox. All right, that is the third one. The first thing, you see what we wrote as Fib retracement. When you draw that Fib retracement, for you to be able to get a particular very good discount zone where you can buy the market, what you have to do is to first of all identify a very low point and then identify what? A high point. Once you can identify a low point and a high point, you take your Fibs tool and draw it from what? The low points, draw it and extend it to what? That high level, right? So once you extend it to the high level, let me bring out the full Fibs. All right. So once you bring it to that high level, what you can now be expecting is that the best place to find discount levels for you to buy the market is when the market comes anything below the 50%. So you use your Fibonacci retracement tool to identify the very good premium and discount levels in the market. So to do that, in your market structure, the first thing you want to do is to identify a low and identify a high. So once you can identify that structural point of a low and a high, the next thing you do is to do what? Draw your Fibs from that low to that high and wait for price to come into a discount level. Now, our definition of discount level is anything at 50% or below the 50%. So whenever you now want to buy in the forex market, where you want to be looking at to buy from is anything from this 50%, all right? Or you want the market to do what? Come below the 50%. So let's say 70%, 80% discount, or even possibly 100% discount. You can get that sometimes. Okay? So we use this Fib retracement tool to help us identify very good discounts and premium zones in the forex market where we can seek to take trades. So this is how to take trades based on discount zones. For the premium zones, what you want to do is to identify what? A structural high point and a structural low point. And then draw your Fibs from what? The high to the low. And then you want to see price come here, anywhere at the 50% or above the 50%, where you can now begin to sell price from a premium zone. Remember, and then when identifying discount zone with your Fibonacci retracement, you want to draw the Fibs from the down to the up of the structural point. When identifying your discount zone with your Fibonacci retracement tool, that is, let's say you're looking for buying opportunities, you want to draw your Fib from the low to the high. That's how you draw your feeds to be able to get what those good discount zones where you can buy from. But when you want to sell in the market, what you want to draw your feed, you want to draw your feed from the high to the low. That is doing the opposite of what you do in the buy in looking for selling opportunities where you can now expect price to come into a premium zone. So you can now be expecting to do what? Sell from there. So we use just these discount and premium zones to identify possible places where we can take one or two trades from in the market.